Welcome back, everyone. I'm Simon Severino. Today I'm sharing with you how you can make 50K per month just by selling conservative options, only selling puts. And by the end of the video, make sure you stick around because I will show you one secret that only very, very experienced Wall Street traders are aware of, because it's a very small discrepancy in the system that you can use for your advantage. Totally legal, totally fine. There is no risk, no additional risk. There is, of course, some risk, but we will calculate that risk together. And you will see it's in the conservative range where this channel wants to be. So I will show you how to make 15K per month selling puts, and I will show you one special put strategy that is a secret and that 99.9% of experienced traders even don't know. But I will show you exactly how to do it, and I will show you around, okay? So are you ready, guys? Let's make some money. Let's add some additional income to your life, because if you're here on the investing show, you want to become the best investor, the best capital allocator possible. And we're doing this live here in front of everyone so that we all learn. This public portfolio is now at 1,090,000, which means we are 37% of the way to a 3 million net asset worth. We're doing this with a compounding portfolio. That's just buy and hold, pretty boring, high quality companies, only the best 9 companies in the world according to our criteria. Some real estate, very boring, but very reliable. And the income portfolio. Today, most of your questions were around the income portfolio, so let's go there. And when I say most of your questions, where can you guys ask the questions? It's, of course, here in the Sprint Club. If you are not aware of the Sprint Club, this is where we help you turn your expertise into 5 to 7 income streams. And you can tag me here anytime with all your income questions, meaning questions around options. This is how we made $15,000 this month just by doing what you have seen. And this is the performance currently. Year to date, we started this income portfolio in January. It's now the last day of October. Maybe you see this in the first days of November. And we are up 50.47%. So, of course, there is risk. Because in the beginning I said no risk strategies. There is no riskless strategy, but we are managing risk. We are aware of the risk, and we are managing the risk. And I will show you exactly how to manage. And because we are managing the risk, look at this linearity. I mean, can you have a better performance than this? In a very volatile year, we have been steadily making profits. This is the moving average. So, of course, there is risk, but what is the best way to mitigate risk? Some people say, yeah, it's passive. Just put everything into index. Well, it's one way, and it's certainly one of the best ways. Still, there is a ton of risk in there. I go with Warren Buffett that the best way to mitigate risk is to think. And that's what we're doing here together. That's why I run this channel, because I want to think in public with you so that we all get smarter, sharper, and better as capital allocators, as CEOs, as entrepreneurs, as investors, as traders. So where can you ask the questions? It's in the Sprint Club. The Sprint Club, you can join for free for 7 days at strategysprints.com. Now, we are on our way to do this. Our strategy is a compounding portfolio with as big as the positions as possible, 10%, 15%. The income portfolio with as small positions as possible, 2%, 1%, 3% of the overall portfolio. And we are on track of our own self-given goals. And we are in the income portfolio. We're at 167,000 today, and which is on track. And the compounding portfolio is at exactly 300,000 today, which is on track too. So, but Simon, I have no alpha. And it's fine. You don't know anything that anybody else knows. That is correct. We don't have faster internet than Wall Street. We are not faster than the algorithms of Wall Street. So we actually have no alpha. We don't know anything about insider buyings or sells faster than the biggest hedge funds. So we can actually not beat the market. Except when it rains. You are probably too young to remember Ayrton Senna, but he was the racer that said you cannot pass 15 cars when the weather is sunny, but you can when it's raining. So that's the strategy here. We have a much longer list of things that we don't do than of things that we do. They are very conservative. And it's only a few themes that we invest in, and they are all very well researched. But today we look at the income portfolio. That's this simple strategy that right now is making 50%. And this strategy is second level math. It's simple, it's repeatable. Let's look at, let's not talk about things. Let me show you why it works and that it works. So our win rate is 95.97%. This is from January to today, end of October. And we made 238 winning options. 80%, 90% of them is selling cash secured puts, and 10% has been selling credit spreads. But you don't need credit spreads actually to do this. And 10 losers out of 238 winners makes it a win rate of 95.97%. This is why I said it's no risk, which is false. It's low risk, right? There is no risk. But it's low risk because we lost 4% of the time. Now, show me anything that you are doing in life where you only lose 4% of the time. I lose more arguments with my kids and with my wife than 4% of the time. I lose like 70% of the time probably. If I play tennis, I lose a point more than 4% of the time. I think Roger Federer wins like 51% of the time. So can you imagine I win probably 7% of the time. And so I lose 93% of the time. So think of all the things that you do in life where you win 96% of the time. It's almost impossible to find them. And if you have them, keep them. Do more of that. Stop everything else. So it's a very high win rate. It's an unusual high win rate. And I will show you exactly why. And if you're in the Sprint Club, you see this live all the time. So these are all the, it's in the open, right? In the Sprint Club, you find all of this information in real time. And you see that most of the puts that we sold, we sell them always 45 days out. They're green. Now, a few of them are red, but it's just 10 out of 238. And one of them is the secret. Should we go to the secret already, guys? Well, first, let me show you an overview, right? We started this public thing in January. I started probably documenting it in March, and we made almost 1,000 in March, then 5,000 in April, 13,000 in May, 10,000 in June, 10,000 in July, 8,600 in August, I was 5 weeks on vacation. September 12,000, October 15,600. And it's now October. So you see the progression here, right? This is a very nice progression. And if we did 15,000 in October without using excess leverage, it's really, really almost no leverage, we can do this every month from now on. So 2026, 2027, we will do at least 15K per month. And I will be sharing this live with you guys, every single move live in the Sprint Club if you want to be in our membership. We are using to do this around $150,000. This is 160 that's in use, and we have 176 in total on that brokerage. Our annual options income so far is $98,000. So this is after fees. We have deducted the fees. It's not after taxes. So depending on where you are, this might have either zero taxes or very high taxes on it. But the fees from the brokerage and the commissions have been deducted from there already. So let's look at the cash secured puts because you want to know the secret. The secret is, ta-da, it's this one. Selling a put 12 delta. So our normal puts are higher delta. They are 30 delta. So this is our normal strategy, is to sell a cash secured put 45 days out at a 30 delta and to close it at 50%. This is the formula, guys. If you do this, your risk is very low. This is repeatable. You can do it for 2, 3 decades, 4 decades, depending on how young you are. And you will compound at the rate that you just saw. You will compound at 50% if you do this steadily without interruption. I did it even during my holidays, right, in August. But it was 10 minutes a day, just a few clicks. And I'm a father of 3. I run a global business. So I'm not doing this full time. I'm doing this on the side. And it makes 15K. So it's a nice side project, right? A nice hobby. Now, that's the normal strategy. Cash secured puts, 45 days out, 30 delta, close at 50%. And this is why our win rate is so extremely high. Because let's look at the risk. The most important thing in life is risk management, and in trading, it's risk management too. So the risk, when we started, the probability of winning is 70%, because this comes from the 30 delta. Okay? So when we start the trade, our risk of losing is 30%. Our probability of winning, so of ending green, is 70%. Over time, over those 45 days, we only have to be right once. So maybe the first 10 days were not green. Maybe day 14, we get green at 50% profits. Now we exit, we cut, we close the trade, we take the 15% profit, half of it, from the table and run. Why? Because after 14 days, after 21 days, the theta starts rising. So the risk gets higher, but the risk-adjusted return doesn't get higher. That's why 45 days, and you close them either at 50% or at 21 days if it was a loser. But if it's a winner, you close it at half winning, you get out. This is how you reduce this 30% risk to actually 4%. And this is what you are seeing here. Does it make sense, guys? The only thing that's in your control is the beginning of the trade, and in the middle, how you manage the trade. Everything else is not in your control. So this is how we manage the risk to be on the lower end. But now the secret. Because what we just showed makes a normal trade. And a normal trade is like you're using 10,000 to make 1,000, right? That's a normal put. Let me show you some puts. What's a normal put? If we go here just somewhere in the middle, what's a normal put? A normal put is this one where we used 22,000 to make $9. Okay, that was a loser, right? But this is a normal put. We've used 19,000 to make 1,000. That's a normal put, I would say. So let's see, what is this? That was a put on an app-loving ETF. I would say it's a normal put. Or we're using 31,000 to make 900. That's on Robinhood. That's a normal put. But now there is a put on steroids. And you will go, oh my God, is this legal? Yes, it is. So selling a put option on the ES, which is the futures contract. It's an option on the futures of the S&P 500. So it's basically selling a put on the S&P 500. But the difference is huge. Do we have an S&P 500 trade here so that I can show you exactly, directly? No, I don't have one. But I still show you. So if you sell a put on the S&P 500, that takes you $60,000 in buying power. And most people don't have those large amounts of liquidity on their account, cash secured. So we use the ES, which is a futures option on the same underlying. It's the exact same thing, but this one uses only 12,000 per contract. And in this case, we did hold it for 5 days and we made 1,200. So that is an amazing trade. And I have the same one on right now, which can make 2,800, and we still have 46 days to go. But this one, I did set it up. So I sold a put 45 days out, 12 delta. Please, guys, this is a 12 delta. It's not our normal 30 delta. And the reason is we want to be extra safe here, okay? It's a 12 delta instead of a 30 delta. And that means very high probability of success, very low risk. And for that low risk, the yield is extremely high because we're using 12,000 to make potentially 2,800, which is incredible. But we closed it earlier. So in this case, I closed it after 5 days. So those 12,000 made in reality 1,274. But I would say it's amazing for a 5 days, 2 clicks thing, right? We were in Italy over 3 of those 5 days. So I wasn't even checking the phone. I wasn't even checking my computer. I didn't even have my computer with me. We were just on family vacation in Italy, just, playing and meeting friends and playing with the kids. So this ES futures option that I sold 45 days out at 12 delta gave me $30 per contract. I only did one because we want to be as small as possible with the contract sizes when we sell options. That's very important for your risk management. So even if I could go higher, I stay small on purpose because that's risk management. You can control only the entry point, nothing else. And so on your entry point, control the size, stay small. That's very important. So we used 12,000 in buying power, and this one is leveraged. That's why we want to be extra safe. So we used 12,000 in buying power to make potentially 2,800, but we went out at 1,274. I call this a success. We closed it at $17. We made this amount and we closed it. We have some few more open, but this is the secret, guys. The secret is selling a put 45 days out, 12 delta on ES, which is the S&P 500 futures option. How is that possible? There is a glitch in the system One of them is, but it's just bureaucratic. And so one of them is managed by the SEC, because the SEC manages equities. And the other one is managed by the CFTC. And so they have different cost structures. That's it. It's the same underlying. It's selling a put 45 days out on the S&P 500 index, but the fees are different because it's two different departments, and those different institutions have different rules. That's it. If you want to ask more questions, if you want to trade with us, you can download the template that I am using and tag me along so that I can mentor you like the other members do. It's 243 sprinters right now in here. We're optimizing sales, income, compounding, marketing, referrals, and we're having fun. So if you want to join us, strategysprints.com, try it out, 7 days free. See you inside. Bye-bye.